Hello and welcome to CIMA Australia's exam preparation series. This is exam preparation film 2 for the March 2015 strategic case study. And before you watch this film, it's recommended that you watch the Taking Case Study Exams film, which is in the CIMA Australia YouTube channel. It's also recommended that you watch the exam preparation film 1 of the strategic case study before you watch film 2. In film 1 of the strategic case study, we saw that the strategic level concentrates on making strategic decisions and providing the context for which those decisions will be implemented, and its focus is long term. And we also looked at the learning outcomes, and we saw that the highest score for learning outcomes was corporate finance, financing and dividend decisions, evaluating strategic position, etc. That doesn't mean that the lower end of the scale, for example the role of IT system, won't appear. We're going to be looking at those higher probability options for this case study. In film 1 we also agreed that of your role in the exam is to play the part of a senior manager of look, reporting to the board, advising on special projects and strategic matters. And we also saw that the exam focus, the case study focus for E3 would be the analysis of strategic options leading to recommendations and justification. In P3, the focus would be on risks associated with this need to be scrutinized, and in F3, the financial strategy needing to be formulated to ensure the strategy decided in E3 is adequately funded. Before we look at the case study again, it's important for you to review the verbs that are used in CIMA, and in particular for strategic level case study levels 4 and 5. So you need to understand what the verb advise or evaluate or recommend and so on actually mean, because you're going to be asked to do these sort of things in your case study exam. So now what we want to do is to research some potential question candidates. What sort of things are going to be asked? These are my ideas, but what I've thought about when I've read the case study several times and done the analysis that you've seen in film 1 is that you're going to be asked about potential special projects and strategic matters from the case study. So as I went through the case study, the options that I thought would arise would be as follows. I felt that the strategic direction of look is about to change or needs to be reviewed, and I certainly would be thinking that that's a project that somebody might be asked to look at. If one of the founders of the company, who's obviously heavily involved in innovation or development of new products, leaves, there's going to be a change or some change effects within the organization, and I think that might be an area that might be worth looking at. You're given a whole list of risks, but there doesn't appear to be any formal risk assessment or risk management process. And you're given some information about a competitor, and that competitor is a competitor in the sense of the paying customers, not of the users. And I think one of the special projects might be to look at a potential acquisition of this competitor. Now these are only my ideas, and you have your own ideas, but what I'm going to do, and I've only got an hour or so to do this, I'm going to look at these 4 ideas a little bit more carefully. But if you felt from the case study that there was some ideas that you think might appear as a special project or a strategic matter, then you need to follow those up in the same way that I'm going to follow up these 4 particular ideas which appealed to me as potential ones. So my next step was to look at the learning outcomes for each of the pillars, and in E3 I've listed the learning outcomes here. And I tried to say to myself, did this learning outcome appear in the case study, and what would be the effect of those special projects? And when you look at the strategic direction of Look, it seems to be at some sort of a crossroads at the moment, then A1, B1 and B2 certainly would lend itself to looking at what sort of strategic direction might this company go in. A2 ethical issues, I can't see any apparent ethical issues. That doesn't mean it won't come up, but there doesn't appear to be anything directly related. C1, organizational change and change process, C1, C2, C3. Well, if VJ leaves the company, who's the principal innovator, then obviously there's going to be some changes that might have to happen. Where's the innovation going to come from? And will that lead to maybe some looking at the leadership of the business? Will that need to be looked at? So all of that C1, C2, C3 could be involved in the loss of the innovator. A D1, strategy implementation tools. Obviously that has got some effect or some connection with strategic direction or innovator loss. IS requirements, well, we see in the case study that Look Search is responsible for the IS functioning of the company, and that doesn't look appropriate in a company that's growing very widely, and perhaps that needs to be just remembered. And E3, E2, big data, well, Look has got an enormous amount of big data. Is it being used strategically? We don't know. So what I'm going to do now is I'm going to go through some of these points and look at some of the material in the E3 syllabus and say, well, look, if I was going to take this exam and I felt strongly that these were the issues that might come up, these are some of the areas that I'd want to review and make sure I understood pretty well. Well, if you're advising a board of a huge company like Look, then you would be expected to understand and to be able to articulate very clearly the rational model of strategic planning. I don't need to go through this with you, but you certainly would need to review and make sure that you understood the process, and in particular the loop back. And so we're going to look at the mission in a moment, we're going to look at the vision and then the goals. So if you're going to advise the board of Look about the rational model, then you need to understand how to generate some options for strategic choice, how to generate generic strategies. We're going to look at a moment at ANSOF, the options of acquisition or growth. And when you've generated the options, how do you evaluate them as far as suitability is concerned? Does it fit in with the mission statement? Is it acceptable to all the stakeholders? And we're going to look at stakeholders, and there's two quite distinct sets of stakeholders that we have to consider. And have we got the resources to implement that particular strategic choice? Once we've got some options, we need to consider about implementation, and we need to look at the organization structure, we need to look at the culture, and we need to look at the changes that are going to be necessary if we implement some strategic choices. And then, of course, there's some feedback to complete the loop. It's implied if you're going to be an advisor on strategy to the board that you're very familiar with some of these models, strategic models, a PESEL analysis. There is a very limited SWOT analysis. In my opinion, if I were doing this exam, I would certainly look at that SWOT analysis in some more detail and perhaps have a go myself at developing perhaps a better SWOT analysis. Stakeholder mapping, well, you've got two particular groups of stakeholders. You've got the founders and you've got the general public, if you like. Porters, Diamond and Five Forces, not quite as important in this particular instance, I think, but competitor analysis certainly is, and competitive strategies might be something that you need to look at carefully. As we're told in the case study, Look has two, or often credited with two mission statements: connecting people to the world and do only good. And these mission statements were perhaps developed when the organization was in its infancy, and you've got the three founders who had these social ideas as well as business ideas, but the issue now is that perhaps the business has grown beyond these three founders and is now a corporate business with corporate shareholders and perhaps other responsibilities. And maybe the mission statement needs to be refined or rephrased. And it's certainly one thing I would think about before I sat the exam, is to say what sort of mission statement might be appropriate for this company at this point in time. Very important here, the organization must know what it wants to achieve. And is connecting people to the world what it wants to achieve? Well, it's done that. It's connected people. But it's also a business that wants to earn money. And connecting people is perhaps not what's needed at the moment. Perhaps something else is needed. So once you've rethought the mission statement, maybe you now need to think about some goals and objectives. What is going to be the goal of the business? And one of the aims of the business, on page 10 of the case study, for example, it says that Look's main strategic priority is to maintain market dominance, but it doesn't actually say dominance of what? Dominance of searches, dominance of advertisers' revenue. So again, once that mission statement is clear, how are you going to implement this? And also told on page 10 of the case study that the loss of significant market share to a competitor could lead to disproportionate losses. So what are going to be the goals and the objectives that flow on from the, if you like, the rephrased mission statement? Maybe you could think about some of those, or at least and one of the things you've got to consider when you start looking at goals and objectives is the choice. You might not just offer the board one choice, you might offer several choices, and you might look at these choices in different ways. So when you're looking at these strategic choices, what are you competing for? Are you competing for market share? Are you competing for advertisers' dollars? Are you competing for the number of people that do searches? Maybe you need to be very clear about what your competitive strategy is. You also perhaps need to think about your products. Which products are you going to compete with? Where's the direction of your growth? And you might need to think about your organization. If you're growing, are you going to grow organically by producing your own products, which is what's been happening so far? But if your innovator leaves, are you going to have to grow by acquisition? So these are some things that you might want to think about before you decide on your strategic choice. So if you were the senior manager reporting to the board about strategy, you would have considered a resource audit, and maybe when you're responding to the questions you'll be asked in an exam, you might be able to phrase some of your responses in the sense of having done a position audit. Most of the material for doing a position audit in a general sense is available in the case study. So you might have thought to yourself, well, if I were presenting a position audit, what would I include in resources, products, operating systems, and so on? You would be expected to know where things are in the product life cycle. You're told that the major product, the search engine for Look, has reached saturation point. And so let's say it's some sort of level of maturity. Is this falling off of sales and profits as products reach their maturity and go into decline? Is that where you are with your major product? If it is, that's a big concern, because you need to make sure that that is substituted by something else, or the life cycle of that product can be enhanced in some way. So what way is that? You should feel comfortable about describing Ansof's growth vector matrix. You should be able to look at the existing markets and products, and in particular how to maintain or increase market share, how to dominate growth markets, how to drive out competition. These are key things that the board of Look would be interested in. How to develop new markets for current products. new distribution channels. This may be the key to the growth of Look into the future. New products, well, if VJ leaves, where are you going to get new products from? And how can you force competitors to follow you rather than you following your competitors? Or what other things that you might do to diversify, or new competencies. So again, this is an area that you need to be very familiar and be able to communicate with the board about. So one of the areas of business that you might look at very carefully, which is what I want to do, is to look at expansion by external growth. There might be some internal growth, but you've already done a lot of this. You've already got overseas offices, you've already got multinational operations, you've already got global operations. Is the growth going to come from this area? Maybe mergers or acquisitions. So this might be an area that you might wish to look at, and I'm going to certainly look at it. So a merger or an acquisition could provide access to a variety of resources, and one of the key resources is highly skilled technical people, and acquiring a near competitor would certainly help to ensure a supply of these sort of resources. So if you looked at perhaps acquiring or merging with Friend Time, access to a variety of resources, technological skills, maybe marketing skills, can spread the risk and can have some benefits. You need to be very clear about the reasons, some of the reasons why acquisitions fail to enhance shareholder value. And the first one is cost. People often pay too much, and one of the things I'm going to talk about later is how to value a competitor like Friend Time. Cultural problems, well, they're very similar industries, so there shouldn't be too much culture. Customers may be disturbed by changes. Perhaps that's not the case. So maybe this one is certainly one thing that we've got to look at. And we've still got this issue where we've got 3 founders who have got very big voting rights, and we've got to be careful that that doesn't get in the way. So you've got to be very clear about evaluating strategic options. Any strategies that you put forward has got to be suitable. Does it fit in? It's got to be feasible. Can it be done? Can it be paid for? And it's got to be acceptable and suitable for different stakeholders. Now, that's a very important question. So again, we might need to think about what sort of return, if we're going to look at an acquisition, what sort of return we might need. But down here, this is the key thing. Investment decisions, shall we buy a competitor, are supposed to increase shareholder value. And so again, if you're offering strategic options, and one of those options is acquiring or merging with a competitor, you need to be very clear about shareholder value analysis and economic value added, which we're going to look at in a moment. Again, evaluating strategic options, you need to be clear about trends, how to value intangibles such as brands. So if you're looking at, for example, acquiring Friend Time, how much is that intangible asset called Friend Time? How much is the name worth? And the interrelationship of the 2 businesses. So these are strategic uncertainties. So if you're going to suggest, for example, as a strategic direction that maybe the board should consider acquiring a large competitor, you maybe need to refresh your memory about Greiner's chart about growing companies and this idea of evolution and revolution. And if you look at Look, the business, obviously it started through creativity and it's grown until it's now a large organization. And obviously there's quite a bit of delegation going on by the founders. But where are you? Where is Look in this stage? What phase are they in? Are they in an evolution stage, or are they in a revolution stage? Well, at the moment they're in an evolution stage, but the risks in the market that we've been given and the idea that VJ may leave might lead to a crisis of control because now one of the founders leaves, and maybe the autonomy or the voting of the entity, if he sells his shares to the public, for example, the public, the shareholders, may suddenly have voting majority, and there might be a crisis of control. So you need to be able to explain where you think look is in this chart. So now let's consider that there is the possibility with a different strategic direction and a change because of the VJ leaving the company, that there might be here some triggers for change. And what sort of triggers might happen, and you need to maybe think about this idea of what is going to trigger some change. Well, the internal factors, changes in the goals, new product lines, maybe changes in the organization structure, maybe we might need to consider some new senior managers, particularly if there's a merger of friend time. So one of the things you may be asked by the board is to come up with some ideas about change. What sort of models of change are there? And you might want to, for example, consider reviewing some of these models. For example, Kotter's 8-step model. How does this work? So if you're going to talk about change to the board in an exam, maybe you need to be prepared to talk about which models of change might be appropriate and why you think one is better than the other. Maybe you have one that you might wish to recommend. And you might wish to review McKinsey's 7S model about culture and change, the links between organizations' behavior and the behavior of the individuals. In Look, it seems to me like in Google and many of these modern companies, the individual employees, the culture of that organization is very important. And whenever you're considering a merger or an acquisition, one of the key factors in it is cultural compatibility. A lot of mergers and acquisitions fail because of cultural incompatibility. One culture simply doesn't match another culture. So it's important that you consider that, and the existing cultures should be considered. And these shared values are very important. And obviously it's possible, because they're very similar businesses, that Look and Friend Time have shared values, in which case it might be appropriate for you to discuss the McKinsey 7S model. Again, when we're looking at change, we need to consider how change is led. It just doesn't happen, and it might be that we need to consider what sort of leadership is needed to make sure this change follows. If you've done some research into, for example, Google, you may have seen that the founders brought in a fellow called Eric Schmidt, who was the CEO for quite some time, and maybe mentored one of the founders, Larry Page, who then became a CEO. And again, if you watch the film about Steve Jobs called JOBS, Jobs, you'll see what happened at Apple. Founders start the company grows, becomes a global company, and in this case, Steve Jobs felt he had to leave, but he was brought back later and turned Apple into a really global powerhouse. And what you need to perhaps talk about is the difference between transactional and transformational leadership, and the change that's going to be needed if there's a change of strategic direction or an acquisition or a merger is charismatic, inspirational, intellectual motivation. This is the appropriate leadership style in times of change. And you need to perhaps refresh your memory about these approaches to strategic leadership. So what sort of characteristics should a leader have, and who has those characteristics in Look? So one of the key things that we talked about earlier was achieving success for the shareholder. But of course, in this business Look, there are two classes of shareholder: the founder shares that have a very large voting right, and ordinary shareholders that just have a single voting share. And if, for example, VJ, one of the founders, leaves, it might be an appropriate time to readjust these voting, because the minority shareholders might need to have more consideration than they've got now. And particularly if one of the strategies is to issue more shares, then this question about having 20 voting shares for the founders may be questioned. So when we're looking at shareholder value, we need to consider techniques such as economic value management, EVA, and what we're looking at here is economic profit. And what we might also want to do is to look at shareholder return, dividend per share, movement in share price, and market value. So you need to refresh your understanding of economic value management. Finally, in E3, we need to consider information, and particular strategic information. This is an information-based company, and whenever we're talking about changing strategic direction, we must also consider, in this particular instance, the necessary understanding of strategic information. And when we're considering strategic information, we need to remember that strategic information is used to plan the objectives of the organization. And we're told in the case study that all matters relating to centralized information systems are the responsibility of LookSearch. And LookSearch is just one of the entities in this global organization. And it's probably not appropriate for one of the subsidiaries to have control of the information system for the whole organization. And so that might be a special project where you change that focus of strategic information so that it is connected or related to the strategic planning and flows down through the, for example, in this case, the Anthony hierarchy. And again, when we're talking about information systems, we need to be very clear that we understand these acronyms IS, IT, and IM so that we use them properly and correctly. So information systems is different from information technology, which is different from information management. So please make sure that you understand the information system strategy is supported by the IT strategy and the IM strategy. So it's important you get those acronyms correct. So that's some of the things I would look at for E3 preparation. Now let's have a look at P3. And again, number of things here in P3. The first area that I would consider looking at is the risk management process. Is there a risk management process? You're given in the case study a whole lot of risks, but you're not given any indication that there is a formal risk management process in place, and I think that would be important. When we're looking at senior management responsibility, we've seen in the case study that the non-exec directors are not only in a minority, but one of the non-exec directors is definitely not independent, and some of the responsibilities of the other NEDs don't appear consistent with their skills and qualifications. P3A3, the ethical impact of risk, we have this dichotomy. Their mission statement is doing good, but the business goals, what the shareholders, the external shareholders want, obviously, is profits to enhance their share price. And in learning outcome B2, risk of unethical behavior, again, are other minority stakeholder or shareholder interests being safeguarded. Risks of strategic implementation, maybe we need to consider a balanced scorecard to make sure that the strategy is balanced through the different viewpoints of a scorecard. When we're looking at corporate governance B3, we might need to consider board diversity. There's a lot of people with very similar skills. I've already mentioned the non-executive directors. When we're looking at control systems, we might need to consider the responses to risk assessment. Is there a proper risk assessment process? And when we look at C2 and C3 internal audit, we need to ask ourselves, is the scope of internal audit the right scope? They're doing what looks like traditional internal audit, but in this sort of company, look, is that scope of internal audit sufficient? There doesn't appear from the case study on the surface to be any financial risks directly apart from competitive risks. And when we're looking at capital investment, we've got this, again, potential conflict between stakeholders. The founders wanting to go in one direction, and maybe the stakeholders maybe wanting to go in another direction. So let's have a look at some of the issues in P3 that I would review if I was going to take this exam. Well, if you're going to talk to the board about risk management, you need to be very conversant with the enterprise risk management process. And you need to make sure that you understand how it works, how it operates at every level, how it applies to strategy, and it's related, it's connected to the achievement of objectives, which is something you might have looked at in E3. You need to be conversant with ISO 31000, how to assess risk, frequency, severity, and how to deal with it. Transfer, acceptance, sharing, etc. Very important that you're familiar and you can articulate how this risk management process works or should work. You need to be able to articulate to a board how a risk policy ought to be developed, who's responsible for managing risk, and if you were asked to set up a risk management function, what would that function do? So again, this could be a special project that you're asked to do to recommend how to implement a risk management function, and you need to be familiar with these sort of areas. This is often a difficult thing when you're an advisor to a board. If you're an advisor to a board and you see that some of the functions of the board are not being done properly, you need a great skill in communication as to how to communicate this fairly and yet directly. And for example, you might consider that the experience of the board is very one-centered. It's very much in the area of look. And if you look at, for example, Friend Time, you'll see that perhaps they're spending much more money on marketing, and maybe there's a not sufficient diversity on the board, and you might need to consider also this area of independent directors. And of course, where you've got a board that has the three founders of the business on the board, and the executive has a majority on the board, then you've got to ask yourself the question, is the board overseeing the chief executive when the chief executive in this case is a founder and a board member? So this whole thing here gets very murky when you're looking at the composition of the board and their responsibility. So when we're looking at corporate governance, in most corporate governance recommendations, it's recommended that the majority of directors should be independent with no business financial connection and no share options or pensions. Well, in the case of Look, we can't say that. Already the board is skewed to executives, and at least one of the non-executive so-called directors is definitely not independent. So there's an issue here. One of the other issues that we might need to think about is what sort of non-executive directors ought we to be looking for, and you need to be clear about what type of non-executive director might be appropriate to a business like Look. And one of the things that you might want to think about is one of the aims of corporate governance is to prevent bias by individual directors or groupthink, thinking alike, by the board of directors, by the implementation of measures. Because scrutiny by independent non-executive directors helps to break up this idea of everybody thinking alike. It might be that one of the recommendations would be what sort of directors should we have, and what benefits would they bring to a board-like look. And one of the key things that's needed in a business-like look, particularly as it becomes national and international, is a strong control environment. And again, when you've got a small group of people that have started a business and that business grows and grows, and they want to stay, if you like, innovating products, then somebody has to take the responsibility, and the board has to take the responsibility to make sure they're clear risk management strategies, there are clear authorities and responsibilities, and there's an overall control environment that promotes integrity, it promotes ethical values, and promotes confidence. So flowing on from the idea of control is to consider how well organized and how well directed is the internal audit function. And this is, as you are aware, an independent function. So again, is the internal audit function independent? Who does it report to? We've got non-executive directors who appear to have very little financial experience and very little control experience. So again, we need to understand, is the internal audit organization capable of dealing with changes in organization structure, and in particular changes in the key risks? It's a question we need to ask. There are many types of internal audit assignments, and we're told in the case study that they do lots of compliance audits and heavily emphasis on compliance with IT operations to deal with security and privacy of data. That's very good. But do they actually do any risk-based audits? So we need to understand that. Do they do any operational audits? So you need to be able to articulate what an internal audit organization ought to be and do, and to try and compare it with what they actually are doing. It might also to be appropriate to consider what an audit committee ought to be and what the benefits of an audit committee are, and what type of people ought to serve on an audit committee. We're told, for example, that the non-executive chairman is the chair of the audit committee, but the other non-executive directors are on the audit committee. Alison Gordon and Michael Yip seem to have little, if you like, financial understanding, and that may be a severe weakness in this particular organization structure. It may be necessary for you to discuss the board what sort of financial risks businesses generally face, and which risks Look faces. On the face of it, their balance sheet looks strong and they don't appear to have any particular financial risks, but the unseen material might present something to you. I would be tempted to review and consider again some risk quantification methods, and one of those might be the certainty equivalent approach to convert expected cash flows into risk-free amounts and discounting these at a risk-free rate. That might be an approach that I would be interested in, and also to consider expected values based on probabilities. If we were to consider an acquisition or a merger with another entity like FriendTime, you would need to refresh your memory about CAPM, Capital Asset Pricing Model, to understand the beta, or the risk, of not only Look but also the entity that you're looking at acquiring, in this case FriendTime. And again, if you're considering acquiring a competitor, you might need to consider the capital structure that might be most appropriate for this, and it may be that debt finance might be something that you want to consider to finance this acquisition. And debt finance, of course, would mean that there's no change in earnings per share, no change in structure or control, lower issue costs than dealing with shares, and most importantly, it's tax deductible. So it might be that you might get asked to say what would be the benefits of raising some money to acquire a competitor or competitors, and this might be an area that you might need to refresh your memory. So that's all for P3. Let's have a look now at F3 and see some of the issues there. So let's have a look at the question candidates for F3. In the learning outcome A1, strategic financial objectives, one of the things in the syllabus is the Global Reporting Initiative, GRI. I said in film 1 that the corporate social responsibility report seemed out of place. I mean, it's a good thing to have, but it just didn't seem to have a place in this report. Why is it there? So one reason it may be there may be for you to provide the board with some information about what's happening in the world of GRI. When we're looking at strategic financial policy, we need to look at shareholder interests very carefully, and in particular taxation planning. In film 1, you will have noticed that both Look and Friendtime appear to be paying low amounts of tax, which may mean, like many multinational companies, they have done some tax planning or tax minimization, and that might be an issue that might arise. In B1, although there's nothing directly in the case study, but if you're going to raise money for an acquisition of a competitor, you might wish to raise money by equity finance, and if you do that, then obviously the theoretical ex-rights price TERP might be something you may get asked about. There doesn't appear to be anything in the case study about dividend policies. That doesn't mean it won't come up, but there's the potential for C1, C2 and C3 of competitor acquisition, and we'll look at some of the ways in which competitors or acquisitions might be priced. So let's have a look first of all at this concept of maximizing shareholder wealth. I'm sure the people who have invested in Look, the non-founders investors, have the assumption that their objective of the business is making profits or improving their share price, and as we can see, the share price has continually risen, so that's good. But there's an issue here that the majority of voting shares are held by the founders, and they may already have lots of money. They may be getting large dividends and high pay packets, and they perhaps not necessarily interested in the share price as much as the external investors. So we might have some conflicts here. We might have short and long-term conflicts, and might have multiple targets. So we need to consider the issues around maximizing shareholder wealth. So again, if you were to be asked to advise the board on the acquisition, for example, of a competitor, you would want to talk about these three integrated decisions. The investment decision: how do I identify and evaluate investment opportunities? How do I finance the opportunities? And what effect, what dividend decisions am I going to make, looking at it long term? So as we said earlier, if we're going to look at the cost of equity, we're going to look at the risk factors of acquiring a competitor, you need to refresh your understanding of CAPM, the capital asset pricing model, and we need to work out the beta, not only of Look, but also of the target, in this potential case, Friendtime. Again, advising the board, if you were to advise the board about the potential takeover or merger or acquisition, you need to be able to discuss it. What are the benefits? What are the reasons why you might do it? And what are the factors you might consider in a takeover decision? What's it going to cost? What is it going to be? What the reaction of the shareholders of the target? What are the reaction of our shareholders, Look shareholders? How are we going to pay for it? Are there any accounting implications? And what is the future policy we're going to have towards, for example, dividends or towards the staff that we employ? So you need to be able to articulate this area very well. So if you're going to recommend a merger or a takeover to the board, you need to be clear about why the takeover strategy is recommended and what are you going to get out of it. So are you acquiring it because you want better management? Are you acquiring it to increase earnings per share? Are you acquiring it because it's an important competitor or key talents and technology? You need to be very clear about what you're acquiring and why. So one of the things that you need to be able to calculate or comment on is the effect on earnings per share. So if the target company's shares are bought at a higher PE ratio than your own company shares, then your company shares will suffer a fall in earnings per share. If the target company's shares are valued at a lower PE ratio, then obviously the predator, in your case Lux company shares, will benefit from a rise. So you need to look at earnings per share and you need to look at a consistent dividend policy. It's got to satisfy both sets of shareholders. So one way of valuing a business is to use dividends or cash flows of the merged company, the two companies together, as a basis for valuation. And you can calculate the value of the combined company and then compare it with the value of the acquirer. And the excess is the value of the target, of course. So if you think that acquiring friend time, for example, is going to be a viable strategy and it's something that might get asked, you need to then consider what are the ways in which you might value this competitor. And there's several ways that you might consider. One is the asset valuations method. The historical basis is unlikely to be realistic. The replacement basis might be okay, but you obviously need some professional valuation for that. So it's usually done as a business that's up for sale. In this case, I don't think asset valuation is going to work for a viable business like Friend Time. But you need to be able to say why you wouldn't use that method. So the earnings valuation method certainly is a method that you could use. You can see the market value, you can work out the earnings per share, and you can work out the market value from the information that you're provided. The PE ratio might be given to you, and so you can work this out. And here's the earnings yield valuation model. Again, you need to be able to articulate that and communicate it to the board very well. You might also need to explain the cash flow valuation methods, discounted cash flows or free cash flows. Not always going to be appropriate in this case, but maybe you need to articulate why you have chosen one method over another. And of course you may need to also explain to the board why the capitalization of an entity might be significantly above the value of its net assets or tangible assets. And one of the reasons why there might be a difference is intellectual capital, the human resources that is inherent in the business itself, the intellectual property, the human resources, the skilled people, and the intellectual assets, for example, computer programs and the IP. So these intangible assets are very important, and it may be you need to explain what intangible assets are and why they create a difference between market capitalization and net assets. So that's all I want to say about F3. There's an enormous range of subjects in the strategic level, and all I can do is just give you some of the ideas that I have. As I said at the beginning of the film, you need to consider for yourself what you think might appear or what you think you might need to prepare for. I can only reiterate that they're just my opinions for illumination purposes. They're only my opinions for the purposes of giving you some examples of how you might want to research and review what you've learnt. So now let's have a look at actually taking the exams And the first thing we might want to do is have a look at how we might write reports. And certainly you're going to be given some unseen material and you're going to be asked to either write some reports or write some emails. You're not going to be asked to do major calculations. You might be asked to do small calculations, but you won't be asked to do major calculations. You'll be asked to comment perhaps on calculations that you're given. So let's have a look at writing reports first. If you want to write a report, let's look at A. Write a report that prioritized, analyzed, and evaluated the issues facing and make appropriate recommendations. So if you were asked to do that, what's going to be in a business report? And let's have a look at some of the components of a business report. Well, a business report is going to have some short statements, much shorter than writing essays. So don't write long paragraphs. Get to the point. You can use bullet points in reports. And for example, if you want to write something, do a heading to draw attention to the major reports. Don't underline or highlight too much. Be very selective about underlining or emphasizing. It's not necessary. It won't be possible for you to do many graphs or tables or diagrams because of the nature of the Pearson VUE exam process. If you're going to express your own points of view, and this is, for example, you might say, this is my opinion, then express it as an opinion. Don't say, this is fact. This is my opinion. And if you give recommendations, also tell, in this case, the board, how those recommendations are going to be enacted. How are you going to put them into practice? So now let's have a look about writing an email. This is from a previous T4 examiner's report. The suggested approach should be candidates should consider carefully the actual requirement, the purpose of the communication, for whom it is intended, and the salient points that you wish to communicate. This means that you need to think carefully about the major points which need to be included in the communication. Thought also needs to go into the effectiveness of the communication, which means it should have clarity, it should be to the point, and not be ambiguous, verbose. Verbose means just too many words. So here's an example for you of this. Came from a T4 exam. You're asked to email to board members on the differences between profit and cash and the significance of cash flow in the oil and gas exploration industry. So the first thing you need to do is you need to be clear about how you address it. So in your case, if you're going to address an email to the members of the Look board, you might want to say, to Look board members. Who is it from? Well, you could put your name and senior manager. Date, unless you're told otherwise, unless it relates to some information, you could put the date that you do the exam. But if in the information that you're given there's some other date that's important, you need to put that. And what you do is you don't need to make it like an essay. If it says explain the difference between profit and cash, just type here differences between profit and cash. Number one. Number two. You don't need to write a big sentence. And then in the next part, so the second part of the question, the significance of cash flow in this particular industry. You can continue the numbering or you can start the numbering again, 1, 2, it doesn't matter. But you can see here, very simple, heading, bullet point, heading, bullet point, bullet point. Keep it simple like that. So let's conclude with looking at some example questions or requirements from the Pearson VUE CIMA exam. Describe the impact of the announcement on X limited share price. So what these questions or things that you're going to get asked to do are open-ended. They're not specific closed questions like work out the net present value of this investment and make a recommendation whether you should say yes or no. These are much more open. So first thing we've got is a verb, describe. So remember at the beginning of this film I said understand the verbs. Understand what it means to describe. Write, prepare, respond. So these are open things, and what the examiner's probably looking for is not an exact answer. They're looking for your understanding of the issues, and what you've got to do is to demonstrate your understanding. So describe the impact of the announcement on X limited share price. Prepare your notes for your meeting with the finance director about. So imagine that you were going to meet the board and it said prepare some notes for your meeting with the board of Look Limited to discuss the potential acquisition of Friendtime. So what sort of things would you have in your notes? That's the way these things are going to get asked. Respond to Emily Walker on the recent press reports about industrial relations. So before you start responding to the questions you're asked, think you're the senior manager reporting to the board, and you're reporting about strategic decisions and the context in which those decisions will be implemented, and the focus is long term. So you've got to play a role here. You're not an accountant, you're a senior manager talking about strategy, and you've got to do it to the board. So you've got to be very clear. You're an advisor. The board is relying on you for proper advice that they may use. So be prepared. Don't wait until the exam, until you get the unseen material. Try and anticipate what sort of things do you think are going to be asked about this case study. Make sure that you feel you're like an employee of Look Limited. That's what this exam is asking you to do. It's asking you to become an employee of this organization in order for you to demonstrate your understanding of this strategic level. So I hope that this short film helped you. All I can do is wish you the best of luck in your exam. So this is Cliff Bowles. Bye for now.